when you buy a property, the purchase price with a few adjustments becomes its unadjusted cost basis. So that's the cost basis is important because what happens is as you start to depreciate the property, your cost basis is going to decrease, and you have something what's known as your adjusted cost basis. So your unadjusted cost basis is like, for all intents and purposes, the original purchase price, and then you're subtracting the depreciation you're taking over the years, including bonus depreciation, and that gives you your adjusted cost basis. So when you sell the property, say you bought the property for $1 million, right? And let's say you took $200,000 in depreciation over the period of time you owned the property. So now you have an adjusted cost basis of $800. Excuse me, $800,000. Now let's say you sold it for $1.2 million, right? So now you have a total gain of $400,000 because the gain is calculated based on the sales price less your adjusted basis, not your unadjusted basis. $200,000 of that gain will be taxed at the capital gains rates because it's a gain from appreciation of the property. The $200,000 you took as depreciation is going to be taxed in the following ways. So so when you take 100% bonus depreciation or you take bonus depreciation, you're accelerating your depreciation. So when you accelerate that depreciation, that amount is taxed at your ordinary income tax rates. So that's up to 37%. The amount that's the straight line depreciation, or in other words, the depreciation that's taken from the building itself, right? So when you depreciate a property, residential properties depreciate over 27 and a half years. So that's the building. But then you have all the components of the building. And the components of the building have a class life of 5, 7, or 15 years. Those are the components. The 5, 7, and 15-year property is the one that's accelerated. Meanwhile, the building, the actual structural components, those continue to be depreciated over 27 and a half years. So the 27 and a half year depreciation recapture rate's up to 25%. So that's the max you're going to pay on that component of it. The 5 and 15-year property, the bonus depreciation, that you're paying at your ordinary income tax rates.
I see. Is there a typical percentage of how much would be of the two of those, or it just depends? It just depends on the building itself.
Yeah, so it absolutely depends on the building itself. If you want a range, and this is a ballpark number, you would have to get an estimate from a cost seg company on to get more specific. But somewhere usually between 20 to 30% of the property's improvement basis. So here's how you can figure this out, right? Let's just say you buy that property for $1 million. Well, land doesn't depreciate, so land value can vary depending on the location of the property. But let's just say it's 20%. Is a very common number to use. So let's just say it's 20%. Then you're going to have 80% or $800,000 of that's going to be the building, the improvement value as they call it. Now, of that $800,000, that part, usually somewhere between 20 to 30%, will be eligible for bonus depreciation. So that's kind of in a nutshell how you can kind of tell. But yeah, usually 20 to 30% of the improvement value is eligible for bonus depreciation.